Hi everyone, welcome to Monday Market Update. My name's Sam, I'm the head analyst here at CCI. Isn't this a fun time to be in the markets? Everything's looking up, things are positive, everything's green, you're looking at your gains, you're checking your portfolio every single day. Now I'm going to chuck a bit of cold water on everyone just at this stage because nothing goes up in a straight line, especially crypto. It can for a bit, but eventually she's going to correct. And even if we are in that new trend, which I do strongly believe we are in a bull trend, you just look at the charts and you see on the weekly, we have broken that severe downtrend we're in. So we're definitely in a larger positive rally, in my opinion, even with the macro where it is, just play the ball where it lies. We have to be prepared for positive pullbacks on the way up, where you take risk off the table and you just have a look at the market as it is, because I'm seeing a lot of excitement, euphoria, and there's a lot of people caught out here that weren't expecting a rally of any sorts at the beginning of this year, and they're pushing themselves into positions when they're maybe not ready for it, feeling a bit of that FOMO, unsure what to do. So again, a great learning lesson about preparing for these moments when I guess times are a little less favorable. That's when you really want to lay the seeds for the next up moves and different cycles and things that are coming. So again, don't panic, don't make a false decision. Stick to your process, stick to your plan. If you're doing our course, that will give you the best preparation to move forward into this market. Let's just crack straight in. I'm not going to spend too long on the charts today. I wanted to quickly show you Bitcoin and just reiterate what I've just said about please expect a pullback coming soon. The only, I guess, simple indicator that I want you to look at right now is the red line here, the 200-week moving average. It is imperative for the sustainability of this rally. And I think because we're running into it, we are going to see some resistance come in here, and not just some resistance. It is going to be tremendous. It is the one line that the market has adhered to going back all the way through previous bull markets, bear markets, when we've come down to the bear market lows. We've come down, even COVID, we did breach it, but we came back up. This bear market has been incredibly severe. We've actually been underneath it for quite a long period of time. It is hugely consequential to the market structure, the market cycle. So do not be surprised that we run into this level, this red line here coming underneath it. It's a hugely positive sign that we're trying to crack into it again and maybe get above it. But just remember, this is where sellers are going to re-engage, and they're going to re-engage hard. So this red box here that I've just drawn, I expect heavy resistance to come in here. We've had 1, 2, 3. This would be our fourth green week, at least the start of a green week, and now we're pressing into resistance. What you want to see as a bull, you want to see us punch through it this week here, and then next week you want to see us come back down, test it as support, and then we bounce higher to maybe 30,000 as long as everything is favorable. But as I've just been in these markets a long time, and everything again is positive. You have to anticipate that we're going to see a bit of a pullback, and that is healthy. It's a sustainable move. You just do not want to see us just continuing to move higher without any sell-off and profits being taken, because then you have to ask yourself, all right, well, is this going to just end pretty abruptly and it's just going to get sold into really heavily? So could have something similar to this, pull back a little bit there and move higher. The 200-day moving average at around about 20,000 is still on the cards for me over this next little phase. And that's where I've essentially drawn it to, so that makes a ton of sense. But just be prepared that nothing goes up in a straight line forever. We're also seeing on the weekly, the stock RSI beginning to look a little bit toppy. The RSI on the weekly looking a little bit, weakening. But if we just go to the daily as well, I'll just show you, excuse me, what I mean in terms of this. The 200-day moving average is down here. So that would mean, a fairly decent correction from here down about 15%. So 25,000 is a hugely consequential level. Get on top of it, you can really blast through to 30,000. But in this phase here, you just never really see any, Bitcoin that I've seen in the past, especially in this market environment, you never see it just crack straight away. There will always be resistance coming in, challenge it for a while. I mean, we have tried it a little bit here, but nothing has really penetrated it yet. Where I see us going. The daily still looks okay here, that we might have another, pulse up, but that's where my thinking is, either here or a little bit higher at 25,000. We should see a lot of resistance come in, but it all is predicated on the 2nd of February, where we see the Federal Reserve bring in their next interest rate rise, which they're going to do regardless. The speculation is, and the forecasting is, that they're going to go 0.25% rather than 0.5. So that is especially important. Market has largely priced that in now, so just keep that in mind, that you might be going, all right, well, the market's going to come out really, really positive on that day because, the drop in rate rise, but the market's already sniffed this. The Fed's already leaked that they're going to do this. So they're watching the market, trying to rally in this situation. And I highly suspect, while that is bullish news for the markets, Powell's going to come out and use the podium to full effect. He's going to try and smash risk markets over the head, especially if he sees the S&P 500 begin to rally. And I'll just quickly pop on over to that now, just as a real brief snapshot on the daily. Let's go to the weekly for a bit better angle on that. So the S&P 500 is really trying, it is trying, I should say, not it is trying to bust out of this downward pattern that, let's say, Bitcoin was in for a long time, and it's broken out of that. You can see that trend line there very clearly is broken out. Now it's trying to come back and maybe test that as support. But if this can rally hard too here, then 30,000 is on the cards for Bitcoin. But I would just, again, caution everyone when we're looking at a massive resistance level at 25,000, the 200-week moving average. It's just huge. And also I want to throw in there that, especially with altcoins, there's not a lot of liquidity in the altcoins at the moment, meaning there's not a lot of capital here moving through the altcoins. The order books are very, very skinny at the moment. So a lot of the liquidity is with Bitcoin and Ethereum. If Bitcoin does correct, let's say it runs into 25,000 and has that pullback that we think maybe 20,000, alts will get obliterated. So all those tremendous gains that we've been seeing in the altcoins just recently, really start to kick up in the multiple, tens of percent, even seeing some up hundreds of percent. Expect a lot of that to come out. Expect a lot of that to roll back. You will have some nice entry points if you're looking for that future long position or future spot position. Just keep that in mind. The alts are going to get smacked harder because there's not a lot of buyers down below, as there's not a lot of sellers above. So just keep that absolutely top of mind. All right, Ethereum, want to touch on this because when Ethereum's strong, altcoins are generally strong, especially ERC20 tokens. So that's, for those unaware, that's tokens built upon Ethereum. Ethereum looks really good here. And I talk about it a lot, that the relative strength of Ethereum is just very impressive. How it didn't make those lower lows with FTX. It's just constantly consolidating, growing higher. This is a tremendous setup for a move higher. And Ethereum is testing this overhead horizontal resistance. It's almost gotten through this huge volume profile here at around about 16, let's just call it 1700 even. Breaks through there, takes out this previous local high as well, then Ethereum breaks up here. And that, again, you want to see, if you're looking at these charts and think, oh, I need to get in now that it's blasting through, that's not the right mindset to have. You want to have the mindset where if you see a blast through, you think, all right, well, there's going to be a lot of people chasing here. This might get sold in too hard. So you want to wait for the pullback to a major support level. And that's what you want to see on Ethereum, pullback to this horizontal, the previous sort of ceiling here, there, and around about there. Also, it was the base before the June lunar crash. So very, very strong level here as well. You can see that on the volume. This is going to provide a bit of a platform. So there's no, there's less risk, I guess, in waiting and a higher probability play for everyone. If you wanted to get into Ethereum, you don't buy the breakout. You wait for the confirmation. That's the lower risk. In bull markets, there's a bit more leeway for that, but we're not there yet. Bull markets, generally, the pullbacks are shallower, the jumps are quicker. So you might miss an entry point, but with this kind of market scenario, you can afford to be patient. And if you miss the entry, who cares? There's always going to be another opportunity, right? Don't kill yourself, chasing something. Let's move on over to the last chart I'm going to show you. This is the total crypto market cap. So this does include Bitcoin. You can look at it excluding Bitcoin, but I just wanted to show everyone just a nice little symmetry here over multiple cycles. We've just drawn the Fibonacci retracement, and I did draw it on the last one going back. Must be another chart. But you can have a look at the last bear market, bull market cycle. Whenever we've seen the full bull market top, we've always seen a withdrawal back to the 78% retracement level on the Fibonacci. We have gone lower. That was in the previous bear market, but over here you can see we've pulled back to the 786 almost perfectly, hit it once, then hit it again, and now we're starting to crack back into a really nice space. We're already above the 200-week moving average on the total crypto market cap. This looks really nice to me. You want to pull back to maybe the 200 to retest again, and then break through this key horizontal. You break through this key horizontal, this market is trending higher, and same with Bitcoin. A lot of things are just looking super, super positive. Again, play the bull where it lies, and you can get thrown off a lot of this noise. We go into a lot of more depth in the Mastermind course because that's really important. Helps you see around corners and whatnot. But sometimes you can be the victim of over-analysis. And we were calling for a rally at the start of the year just based on a few indicators, but also because we wanted to keep things a bit simpler. A lot of the main things that we were looking at were telling us that this is a really good spot. to expect a rally, and it came with phenomenal timing as well. But sometimes you get that wrong. But we were seeing that the market was heavily incentivized to be short, so betting against the market, saying it was going to go lower. That was the consensus. And whenever you see consensus in the market, and there were many other things that pointed us that way as well, whenever there's consensus, you really have to ask yourself the question, is everyone going to be right? And it never is. Money is made in disagreements, and that's how it played out. The same with S&P 500. Everyone's expecting this mega crash, whereas if you look into things a little bit deeper, I don't know if that is actually going to happen right now, probably more around the Fed pivot. So just keep that in mind. Let's move on over to a newsletter that we released last Thursday. We're broken up into weekly sections now, and I just want to highlight how great it has been, and also the signals that we put out at the end of last month. This is February's breakdown. I won't scroll down to show you what we've got, because we've got a paywall that kicks in around about here. So subscribers, please jump in and check what we've got. But some of the returns that our signals provided last month in terms of the entry points, I know Matisse was up about 117%. Bitcoin's up 40% from our buy signals. There's some other massive movers that some got up into 40, 50%. Those are huge gains to make in a month. If anyone comes from traditional finance into crypto because of those returns, that's what you're here for those outsized gains, those outsized returns. But you just need to know how to structure the buys and move from there. Our newsletter will help you do that. So if you're interested, if you're not a subscriber, please check this out. Click the Linktree link below on this video and join up. So guys, I hope you have a wonderful day. Let's look forward to a big week. But yeah, can't emphasize more that we've got the Federal Reserve coming out on the 2nd. So just expect markets to maybe cool off for a little bit, contract, wait for the event, the news event, and then we're going to see what happens afterwards. So yeah, have a wonderful day. We'll catch you next time. Bye.